Something's off in the motorcycle world, and even Honda, the king of two-wheelers, didn't see it coming. The 2025 motorcycle market crash was unexpected, but Honda's response to the current situation is far from what anyone expected. Let me explain. For years, Honda's motorcycle division has been the company's golden goose. While the car side of the business faced chip shortages, EV growing pains, and brutal global tariffs, motorcycles quietly kept the money flowing. With over 20 million bikes sold annually, Honda's dominance looked untouchable. They were celebrating milestones like 500 million units produced, setting records in Southeast Asia, and riding high on strong margins. But in 2025, the cracks started to show. Global sales headlines still looked healthy, especially with growth in regions like Southeast Asia, but beneath the surface, some key markets began to slide fast. In India, one of Honda's largest strongholds, demand from rural buyers dried up almost overnight. Rainfall patterns shifted, disposable income dropped, and suddenly the motorcycles that used to fly off dealership floors were gathering dust. Over in North America, the story wasn't much better. Rising interest rates, inflation, and a changing rider demographic meant fewer people were willing to spend on new bikes. At first, it seemed like a hiccup, but now it's turning into a full-blown slowdown. And the surprising part? Honda's response has been underwhelming. In fact, many argue they're getting it completely wrong by betting on the wrong products, ignoring their core buyers, and sleepwalking through one of the most important shakeups in the industry in years. So what exactly is going on? Why is the biggest name in motorcycles struggling to read the room, and what does that mean for riders, dealers, and the future of Honda on two wheels? At first glance, 2025 didn't look like a bad year for the motorcycle industry. In fact, by the first quarter, global motorcycle sales had actually hit a record high with over 15 million units sold, marking a 3% year-over-year increase. On paper, the industry looked healthy, but as always, the devil is in the details. That growth was largely driven by a few regions doing the heavy lifting, while others quietly began to buckle under pressure. And that's where Honda's troubles start to take shape. Let's talk about India first. This is one of Honda's most important motorcycle markets, not just in Asia, but globally. Honda Motorcycle and Scooter India, HMSI, has spent years building an empire there, dominating the roads with everything from commuter bikes to scooters. But in 2025, something changed. By June, HMSI reported a sharp 17.3% year-over-year decline in sales. And that wasn't a blip, it was part of a bigger trend that had started to take hold across rural India. What caused it? A combination of things. For one, erratic monsoon rains led to lower agricultural output. That matters more than people think because rural income in India is still heavily tied to farming. When crops underperform, spending power drops, and when that happens, entry-level motorcycles, Honda's bread and butter in these regions, are often the first big purchases to be postponed or canceled altogether. Add to that rising fuel prices, higher interest rates, and increasing insurance premiums, and suddenly, the average Indian buyer was holding back. The demand for affordable no-frills motorcycles was drying up right in front of Honda's eyes, and yet Honda didn't seem to adjust quickly. They kept pushing premium models like the XL750 Transalp and electric scooters designed for city riders, which had little to no appeal in these hard-hit rural areas. Now shift over to North America. The market there is facing a different kind of pressure. It's not about monsoons or agriculture, it's about money and mindset. With interest rates climbing and inflation still squeezing middle-class buyers, motorcycles are no longer viewed as affordable transportation or a fun luxury for weekend riders. They're becoming harder to justify. In 2025, motorcycle sales in the United States dropped by over 9%, and Canada was hit even harder with a 21.8% decline. Dealerships across the region started reporting lower foot traffic, more cautious buyers, and longer inventory turnaround times. The scary part for manufacturers like Honda is that this isn't a seasonal dip, it feels systemic. The younger generation isn't riding the way previous ones did, and older riders, many of whom are loyal Honda customers, are either downsizing, retiring from riding altogether, or holding onto their current bikes instead of upgrading. Meanwhile, in China, a market Honda once hoped to develop into a strong pillar of growth, strict urban two-wheeler bans and a complicated regulatory environment continued to stifle motorcycle sales. Even where there was demand, local brands were getting more aggressive with pricing, making it hard for global giants like Honda to compete without squeezing their own margins. And here's where things get even more complicated. Despite all of this, Honda's top-level numbers still looked fine to the casual observer. Their motorcycle division posted an operating profit of over $4.4 billion with a strong 18% margin. They sold over 20 million bikes in fiscal 2025. On paper, that's fantastic, but when you zoom in, you see a tale of two Hondas. One that's thriving in select regions like Southeast Asia, and another that's struggling to hold its ground in mature, high-priority markets. Instead of treating these warning signs like an industry shift, Honda seemed to approach them as isolated problems. They leaned on legacy strengths and relied heavily on the fact that they're still number one in overall sales. But that dominance hides deeper structural issues that smaller, more nimble brands are starting to exploit. So while global numbers kept the boardrooms calm, dealers in India, North America, and beyond were quietly bracing for a slowdown that Honda didn't seem prepared to face. The market wasn't crashing everywhere, but where it was, the impact was direct, visible, and growing. And for a company as large and established as Honda, failing to move quickly in these moments can have long-lasting effects. That's the foundation of the problem, not a full-on collapse, but a slow burn of market shifts that Honda misread. And unfortunately, instead of recalibrating their strategy, they continued marching to a beat that no longer matched the rhythm of the road. Now here's where things get tricky, because despite everything going wrong in some key markets, Honda's motorcycle division is still putting up record-breaking numbers. It's the equivalent of someone showing up to a burning building and saying, well, the living room's fine, so everything must be okay. On the surface, things look strong. Underneath, not so much. Let's talk numbers for a second. In fiscal 2025, Honda's motorcycle business brought in over $6.1 billion in revenue and turned a profit of $4.4 billion. That's a margin of nearly 18.3%, which is the kind of figure most auto manufacturers would sell their CEO's favorite scooter for. They sold 20.57 million motorcycles worldwide, which is almost 2.3 bikes every second, and they proudly announced a milestone that few companies in any industry can dream of hitting: 500 million motorcycles produced since they first started building bikes way back in 1949. By all accounts, those are Hall of Fame numbers. Honda's execs had every reason to pop champagne and roll out their finest PowerPoint presentations. The narrative was clear: we're untouchable. But the moment you dig a little deeper, it starts to feel less like dominance, and more like denial. Because the reality is, most of those 20 million bikes weren't sold in markets that are crashing. They were sold in places like Indonesia, Vietnam, and Thailand, markets where low-cost, fuel-efficient bikes are still in massive demand. And in those places, Honda is practically a religion. In fact, in some regions, the phrase buying a bike is synonymous with buying a Honda. But even that story has some fine print. In Southeast Asia, where Honda's scooter lineup reigns supreme, competition is heating up. Local brands are getting smarter, and Chinese manufacturers are flooding the market with bikes that are cheaper, flashier, and let's be honest, surprisingly decent. Riders who used to swear by the Honda Activa are now eyeing newcomers that offer similar specs with more aggressive pricing and a little more flash. And then there's the elephant in the showroom: electric motorcycles. While Honda has been dipping its toes into the EV waters, they've done it with the hesitation of someone testing a bathtub that might be filled with ice. They've launched the EM1 e-scooter and are running pilot programs like battery swapping networks and electric concept stores, but it all feels a bit cautious, like they're building an escape raft out of cardboard and hoping the flood slows down. Meanwhile, companies like Ola in India, Yadea in China, and even TVS have gone full throttle into the electric space. They're not testing the waters, they've cannonballed straight into the deep end, and they're already racing circles around Honda's early attempts. Riders are noticing, dealers are noticing, and competitors are licking their lips. But Honda still insists on sticking to what it knows: reliable, fuel-efficient, low-maintenance motorcycles. And while there's nothing wrong with that, reliability is great after all. It's kind of like showing up to a smartphone convention with a pager and saying, well, at least this won't crash. In the markets that are still growing, Honda's playbook is working, but in the markets that are slipping, the response has been slow, tone-deaf, or just plain confusing. Take India again. Rural buyers are struggling, but instead of pushing more affordable models or offering creative financing options, Honda has been busy launching premium imports and showing off concept EVs that are about as relevant to their core customer as a yacht is to a rickshaw driver. It's like offering a gourmet menu to someone who came in asking for a bag of rice. Even in markets like the US, where Honda used to be the no-nonsense affordable alternative to Harley or BMW, things are looking fuzzy. Their small bike lineup, once a favorite among beginners and commuters, hasn't seen any bold updates. And while other companies are experimenting with lightweight electrics, retro designs, or modular platforms, Honda seems content to keep re-releasing the same playbook with a new sticker pack. Internally, the company keeps celebrating the volume. 20 million bikes sold is a great headline, but it doesn't tell you where those bikes are being sold, who's buying them, or how many of them are in regions that are actually profitable long term. The risk here is that Honda's leaning too hard on numbers that no longer reflect the full story. It's like a report card that says you're acing PE while quietly flunking math, science, and history. Sure, you're passing, but are you really learning anything? Dealers are starting to feel it too. Reports have started to emerge about showrooms pulling back inventory, holding off on new shipments, and waiting to see where demand actually goes. That's not something you see when things are going smoothly. That's the kind of behavior you see when people are trying not to get caught holding the bag. And through all this, Honda's official stance is largely unchanged. They're still presenting the motorcycle division as their stronghold, the profit center, the division that's keeping the lights on while their car business wrestles with tariffs and EV growing pains, and technically that's true. But it's also a bit like watching a duck float calmly across a pond, until you look under the water and see its legs kicking frantically just to stay afloat. So yes, Honda's motorcycle business is still bringing in big money, But if they don't start addressing the cracks forming beneath the surface, if they keep relying on past glory while competitors adapt faster and riders shift expectations, they could go from being the top of the market to being the brand that used to be at the top. And if you think that sounds dramatic, just ask Nokia how their story ended up. So now we've laid the groundwork. The market's shifting, sales are stalling in some of Honda's most important regions, and even though the global numbers still look shiny, there's growing tension beneath the surface. So how is Honda reacting to all of this? Well, that's where things start to feel off. Because instead of making bold moves or adjusting strategy to meet the moment, Honda's response has been, for lack of a better word, lukewarm. Tepid, like they're trying to put out a grease fire with a glass of sparkling water. Let's start with India again, because that's where the problem is screaming the loudest. The rural market's tanking, and HMSI's most loyal customers are pulling back. So what does Honda do? They roll out premium models like the XL750 Transalp and double down on promoting electric scooters that cost more than what many rural riders make in a month. It's like your roof is leaking, and instead of fixing it, you decide to install a chandelier. The timing couldn't be more off. India is crying out for affordable, rugged, fuel-efficient motorcycles that can handle bad roads and even worse traffic. What it's not asking for is a Euro-spec adventure bike with Bluetooth connectivity and a seat tall enough to require a stepladder, and yet that's where Honda's focus seems to be. But let's be fair, it's not just India where this disconnect is showing. Across the board, Honda's reaction to the shifting landscape feels strangely optimistic, almost as if they're trying to power through it with the old nothing to see here approach. While competitors are slashing prices, ramping up local manufacturing, or launching leaner region-specific models to deal with economic slowdowns, Honda is still playing the long game, which would be fine if the short game wasn't currently punching them in the face. Then there's the EV strategy, or more accurately, the EV hesitation. Honda's been flirting with electric motorcycles for years now. They've launched the EM1E, and they're dabbling in subscription-based battery plans in EV concept stores like the one they just opened in Bengaluru. On paper, this sounds exciting, innovative, forward-thinking, but in reality, it's barely scratching the surface. The EM1E is a low-powered scooter built for short city commutes, not the kind of ride people in struggling regions are turning to. And the battery as a subscription model might sound cool to tech bros, but it's far from a practical solution in rural towns where even mobile data can be a luxury. It's clear Honda wants to show investors they're doing something in the EV space, but the move feels too safe, too slow, and too superficial to matter in any meaningful way, especially when companies like Ola Electric and TVS are already deep into market penetration with products that are more aggressive, more accessible, and more aligned with what buyers actually want right now. Meanwhile, over in North America, Honda seems to be following a similar pattern. Stay the course, trust the brand, and hope the market bounces back. But the American motorcycle buyer isn't what they used to be. The millennial and Gen Z crowd aren't walking into dealerships asking for a Shadow or a Goldwing. They want electric bikes, smart features, modular designs, and most importantly, a reason to even get on two wheels in the first place. But instead of leaning into that change, Honda keeps recycling the same models with minor facelifts and calling it a day. And dealers? They're starting to notice. Reports of Honda motorcycles being pulled from showrooms aren't just random gossip, they're signs of friction in the supply chain. Dealers are pushing back, unsure if they want to keep inventory for bikes that aren't selling, while Honda continues to ship as if nothing's changed. That kind of disconnect doesn't just strain relationships, it's a sign that the company might be listening to its spreadsheets more than its people on the ground. Even in Southeast Asia, where Honda still reigns supreme, there's a sense that they're coasting. Market dominance is a powerful thing, but it can breed complacency. And while Honda is still selling millions of units in places like Vietnam and Indonesia, rivals are circling. Brands like Yamaha, Suzuki, and a whole wave of Chinese newcomers are becoming more aggressive with pricing, tech features, and financing options. Honda, on the other hand, seems content sticking to the same playbook that's worked for decades. Here's the unfortunate truth. When you're on top for too long, you stop feeling the urgency to evolve. You stop hearing the warning signs because your own success drowns them out. That's the trap Honda seems to be stuck in right now. The numbers still look good, the profit margins are still strong, and the brand loyalty is still there, but the foundation is starting to shift. And instead of building something new, Honda's just slapping another coat of paint on the old structure and hoping it holds. I'm not saying Honda's doomed, far from it. I'm saying Honda is asleep at the wheel. The market's changing faster than ever. Electric is coming, buyer behavior is evolving, and regional economic swings are hitting harder than expected. In that kind of environment, a wait-and-see approach doesn't cut it anymore. So when I say Honda's response to the 2025 motorcycle market downturn is worse than expected, I'm not talking about a catastrophic failure. I'm talking about missed opportunities, tone-deaf strategy, and a company that's too focused on defending the past instead of shaping the future. And unfortunately, in the motorcycle world, if you're not shifting gears, you're falling behind. So far, we've seen how the numbers don't tell the full story and how Honda's response, while active on paper, has felt misaligned at best and misguided at worst. But now let's zoom in a little closer to the actual decisions being made on the ground. Because here's where things really start to feel like Honda's reacting to a market it wants to exist, not the one that's actually in front of them. Take their latest moves in India, for example. As sales began slipping and rural demand plummeted, Honda didn't counter with budget-friendly commuter bikes or rural-focused incentives. Instead, they announced the rollout of a premium adventure model, the XL750 Transalp, into a market segment that's already saturated and, frankly, struggling to find buyers in a down economy. This isn't a motorcycle you take on a farm road or use to haul groceries. It's a niche product for a niche group of riders, most of whom are currently tightening their belts. Now, credit where it's due, Honda has been trying to modernize. They launched the EM1e, a slick little electric scooter, and opened an EV concept store in Bengaluru, clearly hoping to position themselves as forward thinkers in the electric two-wheeler space. But the rollout has been oddly cautious, and it's happening in a vacuum. They're pushing battery subscription plans and concept retail experiences before there's any real infrastructure to support them. The result? It looks more like a press release strategy than a practical one. And it's not just that the execution is soft, it's that these moves ignore the core problem. India's two-wheeler slump wasn't caused by a lack of electric options. It was caused by economic strain, especially in the rural and working-class segments that make up the lion's share of Honda's customer base there. So instead of investing in affordability, reliability, or credit support, Honda doubled down on tech, premium design, and city-focused solutions. It's like showing up to a flooded village with a touchscreen umbrella prototype. Cool, sure, but maybe not what people need right now. This pattern repeats in other markets too. In Latin America, for example, where inflation and political instability have made motorcycle affordability even more critical, Honda's lineup hasn't seen any major adjustments. No stripped-down low-cost models, no serious localization, no aggressive financing schemes, just business as usual. Compare that to what smaller brands are doing. TVS, for instance, is adapting models based on local fuel quality, offering simplified tech and using regional suppliers to lower costs. Honda, on the other hand, seems to be shipping the same units across borders, assuming one-size-fits-all will somehow keep working forever. In North America, things take a slightly different tone. Here, the issue isn't affordability so much as relevance. The market is craving lightweight electrics, cafe racers, scramblers, bikes that are fun, accessible, and a little rebellious. What's Honda offering? Updates to existing platforms, a few styling tweaks, and a whole lot of press about how reliable their engines are. And sure, reliability sells, but it's not the only thing that does. The new generation of riders isn't just looking for a bike, they're looking for a statement, something personal, something they can customize, something that fits into an urban lifestyle that includes gig work, quick errands, and weekend escapes. Honda's lineup, meanwhile, still feels like it was designed by a committee in a boardroom filled with spreadsheets and product life cycles. And perhaps the most worrying part? Honda doesn't appear to be listening closely to its own dealer networks. Multiple reports have surfaced about dealers quietly pulling back inventory, opting out of new launches, or flat out saying they're not seeing the demand for certain models. But rather than reevaluating distribution strategies or engaging dealers in meaningful feedback loops, Honda keeps pumping the same products into the same pipelines. If this were a music concert, the crowd's gone quiet, and Honda's still playing the same setlist from 2016. To be clear, none of these moves is disastrous on its own. The Transalp is a great bike, the EM1e is a solid electric scooter, the premium EV store is a cool idea, but taken together, these actions feel like a company trying to stay ahead of a curve without realizing they've veered off the road. They're building for markets that don't exist yet while ignoring the ones that are actively asking for help. And this is why critics are starting to sound the alarm, not because Honda isn't doing anything, but because what they're doing feels disconnected from reality. They're making moves that look progressive but land flat. They're investing in visibility while missing the real friction points. It's like they're trying to dance in a room where the floor is slowly collapsing. The scary part is, Honda has the resources to adapt, the brand power, the engineering know-how, the global reach, but none of that means anything if the strategy doesn't match the moment. And right now, the moment is demanding clarity, speed, and boldness, not cautiously optimistic experiments that make great headlines but don't move the needle. So as we head deeper into the year, the question isn't whether Honda will do something. They already are. The real question is whether they're doing the right things in the right places for the right people. Because in a year like this one, missing the mark even slightly doesn't just cost you sales, it costs you momentum. If there's one group that always feels the heat before anyone else, it's the dealers. They're the ones on the ground, talking to real customers, reading body language, fielding uncomfortable questions, and watching showroom traffic dry up in real time. And right now, across multiple regions, Honda's dealers are starting to shift uncomfortably in their seats. It began subtly. In India, some Honda dealerships quietly started reducing floor stock, not because they didn't believe in the brand, but because they simply couldn't move units fast enough. What used to be a predictable sales rhythm had turned into a guessing game. Some outlets reported days where not a single two-wheeler left the showroom. And when that happens in a country where motorcycle purchases are part of everyday life, you know something's wrong. The troubling part is that Honda didn't seem to pivot quickly. Instead of working hand in hand with dealers to tweak production positioning, introduce targeted offers, or streamline inventory flow, the company leaned on its usual formula, pushed new models, and let the network figure it out. But when the network starts pushing back, when showroom operators start asking you for incentives, support, or simply breathing room, you've got a breakdown in trust. Dealers in North America are feeling it too. While the US and Canada were never as volume heavy for Honda as countries in Asia, they've always been key image markets, places where a good release could build brand buzz globally. But lately, many North American Honda dealers are finding themselves stuck with bikes that don't align with what riders actually want. A beginner rider walks in asking about lightweight electrics or scrambler style bikes for weekend fun, and the dealer's got a CB500F and a brochure for the Goldwing. It's not that those bikes are bad, they're great machines, but they're not the vibe younger buyers are chasing right now. And here's where things start to snowball. When dealers begin pulling back on new inventory, the manufacturer loses real-time insight into customer behavior. That's the feedback loop cracking. Fewer orders means less data means decisions made in the dark, and soon the manufacturer starts operating based on assumptions instead of actual market signals. Instead of Honda stepping in with tailored promotions or flexible programs, many dealers are left to figure it out themselves. Some are offering their own financing deals or bundling in free services just to make a sale. Others are dropping prices quietly, eating into their own margins. This kind of decentralized damage control doesn't show up in quarterly reports, but it's where the real story unfolds. Then there's the matter of communication. Several reports suggest that Honda's top-down communication with dealers has become more corporate than collaborative. Long presentations, polished numbers, pep talks about long-term strategy. But when a dealer's worrying about keeping the lights on this quarter, phrases like diversified product verticals and electrified synergy roadmaps don't really hit the spot. They just want to know how to sell the bikes sitting in their lot today, not 5 years from now. And let's not forget the aftermarket guys. Mechanics and parts suppliers are watching customer footfall slow down too. Fewer new bikes means fewer customers returning for service in the first few months. If a dealership isn't moving product, their entire ecosystem suffers. The ripple effect is real, and it's not being addressed fast enough. Now contrast this with how competitors are handling things. Some are rolling out aggressive dealer incentive programs. Others are deploying local sales teams to run pop-up test rides, regional roadshows, or temporary discounts aligned with holidays and harvest seasons. They're adapting, and they're doing it with their dealers, not to them. Honda, on the other hand, seems to be operating from the top of the mountain, expecting everyone below to catch up. But when the people closest to your customers start hesitating, stalling, or quietly switching allegiances, it's no longer just a market dip, it's a warning bell. And so far, Honda doesn't seem to be listening as closely as it should be. And here's the most ironic part. Honda has one of the strongest dealership networks in the entire motorcycle world. Decades of trust, global reach, deep connections with local communities. That's not something you build overnight. But if that network starts feeling abandoned, unempowered, or misaligned with the direction of the company, it can slip away surprisingly fast. Think of it like a motorcycle engine. The power might come from the combustion chamber, but it's the chain and the wheels that actually move you forward. If those start slipping, even just a little, the whole ride gets shaky. So while Honda may still be selling millions of bikes, and while the execs might still be smiling at shareholder meetings, down at the dealership level, the confidence is fading. Slowly, quietly, but definitely. And if history has taught us anything about this industry, it's that the first people to notice the fall are usually the ones standing behind the sales counter. So where does all this leave Honda? At a glance, it still looks like they're leading the pack. 20 million bikes sold, billion-dollar profits, a global footprint that stretches from the dusty roads of Rajasthan to the urban chaos of Jakarta and the wide highways of America. On paper, they're still the undisputed heavyweight champ of motorcycles, but underneath that dominance is a dangerous drift. Instead of steering into the storm and recalibrating, Honda seems to be gliding on autopilot. Their strategy is reactive when it needs to be proactive. They're focusing on tomorrow's innovation while today's buyers quietly lose interest. They're investing in shiny new showrooms while their most loyal markets are asking for just a little affordability, flexibility, and real-world support. It's not that Honda's doing nothing, they're just not doing what matters most. They've launched electric concepts, but done so cautiously in places that can't support them yet. They've pushed premium models in markets craving budget bikes. They've celebrated volume and global wins while ignoring regional red flags that are becoming harder to hide. And most crucially, they've distanced themselves from the people who made them the powerhouse they are. The local dealers, the entry-level riders, the commuters in small towns, the customers who don't care about cutting-edge tech. They just want a solid bike that starts every morning. In a market where agility is everything and loyalty is earned with each purchase, Honda's current approach feels too slow, too proud, and oddly tone-deaf. The signs are there. Shrinking dealer orders, falling rural demand, missed opportunities in the electric space, competitors gaining ground not because they're better, but because they're listening. And that's the part that stings. Honda has everything it needs to course correct. The reputation, the reach, the engineering power, and the trust of millions. But if they keep moving like this, they risk becoming the giant that everyone respects but no longer relates to. The motorcycle market isn't dying, it's evolving, fast, and in this new landscape, even giants need to pivot or risk fading into the background. If Honda wants to keep its crown, it's going to take more than big numbers and glossy press releases. It's going to take humility, bold decisions, and a willingness to go back to the basics to understand what riders need right now, not just what the company wants to build next. Because if 2025 has made anything clear, it's this: the road is changing, and even the most reliable machine in the world can fall behind if it's not paying attention to where it's going. The question now is simple: will Honda adjust or stall out in the rear view? If you enjoyed this video, make sure you subscribe to the channel and turn on the notification bell. See you in the next one.